plan to add another 100 KL by another 6 to 9 months time, by June or up to maximum up to September. So which we are doing from internal accruals. But our overall plan is to increase 250 KL capacity in the next 20 months time. And of course, as we go and close our fundraising plan, so we are depending more, I would say, we'll be creating more and more capacity and we will be more available to the customers. The market is huge. We have a good product basket, and the product basket, of course, is ready for expansion. We have developed 4 more products this time. We have developed Belasting, Imiglim, and Tapentadol, Ticagrelor. More and more new products are coming, and you might have noticed there's a lot of action happening on the DMF side. So the company has filed 7 more DMFs in this quarter. We have filed 6 more patents in this quarter. So regulatory team is doing its best, and the customers are responding for that. And last quarter, we had the FDA approval, we have PMDA approval, we have Anvisa approval. So a lot of approvals were happening. So thankfully, this was a very comfortable quarter. There was not much happening on the approval side. The team was busy on the business side. Of course, we had multiple audits. So we have shared with you the total intellectual property of the company. We have 147 patents with us, 26 US DMFs and China DMFs, another DMFs. So things are very bright and shining on the API side. And once we increase the capacity of the API, we see more and more people joining the bandwagon of the supply. So we see more and more tie-ups. So since company has not added any new capex in the last couple of years, I would say almost 2 decades, no new plants have been done. So we are looking forward for more expansion in the API side. Now coming specifically to the medical devices, I think we already shared that the growth had been phenomenal. So in the glucometer side, the major growth in the medical devices coming from glucometers and BP monitors. And of course, there is 37% growth on year-over-year and 23% growth in the quarter. And if you look particularly for the meters, so we have now 11.23 million meters installed. In a way, we have 11.23 million certified customers who buy strips from us. So basically, it's like a printer cartridge model. We sell the meter and then we supply the strips. So if we have 11 million meters, it's almost 1.5 crore meters. And you can look at the population of the country. Out of 140 crores, only 1 crore people have got meters. And of course, similar numbers would be there with all other people together. So we have a long way to go. So even if we target 10 crore meters, 100 million meters in next 5 years, so all our factories would be busy. Because it's not only meters, we have to supply strips also. We have already sold strips for almost 1.47 billion. So it's almost more than population of the country. So we have sold the strips, but it's doing pretty well. In the BP monitor also, we are seeing a good traction. In BP monitor, in 9 months, we have a revenue of 64 crores, and the number of meters sold is already higher than the number of meters sold last year. So there's a increase in there's a little bit of a price increase also in the BP monitor also and glucometers also. Both the things are doing pretty well. There's a lot happening in the medical devices in the R&D labs. So, but we'll come to you once we have some good news to share. Then coming to our third line of business, which is formulation. As I shared that during the quarter, we had 40% increase on year-to-year basis. And of course, within that, if you look at the breakup, the branded business has grown up by 7%, which is more to do with, okay, you appoint more people, more team, add new states. We have launched two more headquarters. We have launched Hyderabad and Chennai, 2 more headquarters in the branded business. But a major growth is coming from institutional business. That is Jan Aushadhi. So it is almost 3 times from 11 crore to 32 crores. So 196% increase in the formulation business. Of course, the generic business has increased 15%. And then on Dr. Morepen, where we have in 9 months time, Bernal had been doing very good. Lemonade had been doing very good. but we are reducing our focus or our investments, I would say, on the online business, because online business consumes a lot of capital upfront, and we have to do a lot of upfront marketing, which we are trying to avoid because trying to have limited resources. So, but within the limited resources, we have been able to maintain our top line. That's all about the different businesses. And just to recap on the financial numbers, net revenue increased 28%, EBITDA 151%, profit before tax almost 200%, after tax 256%. And the good news to share is our EBITDA is in double digits now, 12.18% for the quarter. And PBT, of course, is 9.8. It's almost pretty close to the two-digit number. And if you look at the 9 months number also, 21% increase in revenue, 79% increase in EBITDA, 100% increase in profit before tax, and 123% increase in profit after tax. I've said it's a celebration time, celebration quarter, and as I said, we started the New Year journey very happily with the new slogan, new core values of excellence, and now we have an excellent quarter. And so this call, I would like to say thanks to all the shareholders for your support and the beautiful journey of 40 years which we had together. Thank you very much, and I'm here to answer if anybody has any questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Darshit from Robo Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, Darshit.
Yes.
Yeah. Hi. Good afternoon, and thanks for taking my questions, and congratulations on the superb quarter. So my question firstly is, how do you see the mix of all these like 4 segments, as you call it, API, devices, formulations, and Dr. Morepen evolving? Like, is it true that API will remain to be a key driver, followed by devices and then formulations? And do we see like Morepen, Dr. Morepen, revenues flattish in the near future, like say 2 to 3 years, 1 to 2 years?
Good. Darshit, I think this is a very valid question, and I'm very happy to share that as it stands today, so we are seeing growth all around. API, of course, is growing at a CAGR of 17 to 18%. And of course, medical devices growing much faster. Medical devices growing 25 to 26% on an average, including the flips and flops together. So, but 26% growth in medical devices. And as I shared that now as we go forward, formulation also is inching up. So going forward, what we see is that API share will reduce from 60 to maybe 50 because medical devices is growing faster. And formulation, of course, will grow a little faster now with increased capacity. Of course, we'll keep investing in the capacities. But more important than percentages and number, I would like to share that it's a part of the overall strategy that we have to go forward integration. If you look at the most of the pharma companies where they have high EBITDA margins, 20%, 25%, they have high gross margins of up to 70, 75% because of the formulation, branded formulation. Now, as Morepen, we started as an API player and we have a strong API. Now, we have good 40, 50 products in our API basket. If we do our own formulation, whether for Jan Aushadhi or for US market or for exports, so we see a lot of advantage that if we have our own API, we can excel in formulation also. And so slowly, the formulation things will go up. And I'm not saying immediate. It may take 3 to 5 years for the formulation business to go up. But we are confident formulation will go up. Devices certainly is growing pretty comfortably. So API I won't say that it will grow low, but it won't grow at 30% or 40%. API will keep growing 17, 18%, I would say up to 20%. And we are, I'll say, quite happy on that. And the second thing is that Dr. Morepen is an OTC. Dr. Morepen is an independent OTC play. It has to do with the consumer market. So, of course, there the whole connect is with the consumer. So it has nothing to do whether I have my own API, whether I have my own formulation, or whether I sell devices or not. So Dr. Morepen, we are still evaluating that, okay, how should we talk about the growth of Dr. Morepen, because it involves a lot of media spends. So we are working closely on that. Certainly at appropriate time will come with the strategy in Dr. Morepen also.
Okay. And I missed the part when you talked about EBITDA margins of formulations. How much was it?
As on today, the gross margins, I was saying, the gross margins in formulation industry, the branded formulation is very high, is between 60 to 70%. But in our case, the mixed formulation, because of generics and Jan Aushadhi and everything, our gross margins are around 30-35%, which is very low. So as we keep on investing on the doctors, as we keep on increasing our reach in the market, so our gross margins will go up there also. And second, of course, is scale. If we just have a scale of, say, 100 crores, so the numbers look small. But now this year, the formulation will be around 230, 240 crores. So it gives a substantial number, and maybe in the Q4 itself, we'll have some better margin, gross margin, and of course, maybe it will be positive. So far, we have been investing behind this business, and we are comfortable that, okay, the margins of the company would also go up.
Okay. So I'd just like to, summarize my understanding that APIs will, relax a bit and grow at, the 17-18% CAGR. Formulations will be the new driver, the high growth segment, and following that will be devices. And then Morepen, we'll see how it pans out, correct?
Yeah, API certainly is aggressive. If for API, even 20-25% growth at a large base is huge. So, and of course, we are happy over there also.
Yeah.
Devices will be growing faster than API, and that is why the share of API will go down, not that growth will go down. From 60%, it has already come to 55%.
Okay. And how do you see the blended EBITDA margins panning out? We talked about formulations margin increasing. So, with that,
blended EBITDA is 12% this quarter, and we hope that we keep on adding 20-30 basis points every quarter. So I'm sure we will be able to maintain a double-digit number regularly between 12 to 13% blended EBITDA in the coming 2 years' time.
All right. And is it possible that you can, give a margin breakup for each segment?
I do not have the numbers with me now, but normally when we make these quarterly presentations, those are the revenue numbers. But yes, whenever we have some private calls with investors and others, so we do share those numbers.
Okay.
And we would appreciate there are business reasons, so some competitors are looking at each other's numbers.
I totally get that. Okay. Thank you so much and all the best.
Thank you, Darshit. Thank you for showing interest.
Yeah.
Pleasure. Thank you.
Thank you. The next question is from the line of Gunit Singh from Counter Cyclical PMC. Please go ahead.
Hi, sir. Congratulations on a great set of numbers. So first of all, I would like to understand the capacity utilization across segments for the company currently.
Yes, great. Capacity utilization, I would say we are at the peak capacity utilization in both the segments. Rather, I would say all the three segments. So in the API, I told that we are already increasing capacity and we are side by side expanding capacity and using it. We are operating at more than 90-95% capacity, which is an optimum for any process industry. In medical devices, we were short of capacities during COVID time, and we were depending on a lot of imports also. BP monitors, we were not able to supply from our own plant. We had to import. And there was a lot of pressure on oximeters and oxygen concentrators. But now, last 1.5 years, we have been investing on the capacities. We have added a new line for the glucometers and strip manufacturing. We have added a new line for the BP monitors, and we are going backward integration for our chip packaging unit, SMT lines. So there's a lot happening just to keep up with the pace of the production. So that is one reason that now the medical devices business is around 425 crores expected within this year. So from a 400 crore, if you have to go to 1,000 crores, we have to invest more and more on the capacities also, because these are all homegrown businesses and we need to invest in the capacities. So third business, of course, formulation. And as I shared that we have started investing in the capacities, and of course there are old machines which are not having high-speed machinery. So we have increased the formulation capacity almost 3 times, which certainly was not fully operational in Q3. So this quarter it should be fully operational. And whenever it is fully operational, we will be doing 75 to 80% because it operates on a changeover and other things. So good capacity utilization, I would say. Maximum, we are at optimum capacity utilizations.
All right, sir. So what is the revenue potential of the additional capacity that we have added in formulations?
Yeah, formulation, as I shared, that will become a new growth driver because in this quarter itself, it has grown 40%. So next quarter, it will grow almost 60%. So we are expecting that formulation business, give or take 1 year here or there, it will become 500 crores in the coming 3 years' time business. As of today, it is around 230 to 40 this year it will close. So it will double the value, and of course, it will take some time for refining the EBITDA margins. But going forward, we are seeing a lot happening on the formulation side.
All right, so that's great to hear. And
Thank you.
considering the top line and bottom line numbers of this quarter, and you mentioned that we will be maintaining double-digit margins for the coming 2 years, can we consider this quarter to be the run rate going forward? Or, do we see any seasonality in the business in some of the quarters?
Yes, great. We all wish, and I don't say that we don't want it. We all want it, but that all depends. Look, ultimately, it's a market. So like I said, that last couple of quarters, I would say almost 1.5 years, there was a pressure on the pricing from China. China was increasing prices. Now they have softened out. Maybe the trend continues. And of course, our team has also worked to reduce the costing. So if everything goes well, this is what we all want. But overall, what we are doing is a strategic changes. Strategic change is that, yes, API, we increase new products and new reach. In the medical devices, we add more distributors and better reach. We are spending on the brand building. Formulation, we are adding on the marketing part and adding on the capacity. So overall margins are going up. So we are comfortable that we should be able to maintain. But answer is positive, but I don't say that, yes, we'll get the same numbers next quarter. So I can't publicly say it.
All right, sir. But considering that we are in the second month of Q4, so I'm sure you must be seeing some confidence. That's why you're saying that we'll see increase in the margins. So that's very heartening to hear. And sir, do we have any aspirational growth number for FY25 in terms of growth in top line and bottom line, or some steady-state margins that we are looking at for FY25?
Agreed. Normally, we do not give any guidance or results predictions. So, but I can only say that we will keep on growing at the same pace as we are growing, or maybe a little better. So, and that's why we always talk about the CAGR or the CAGR. So we are expecting 16 to 17% growth this year while we end the year. So obviously, if we continue the same path, you can imagine that around 20% growth we should get. So then slowly, as we build on capacity, the growth may be a little more. We can go to 20 to 25. But I would say between 20 to 25% is our growth target. And like I said, it's more of an aspiration, and we want to build over that.
And the steady-state operating margins?
Operating margin, of course, EBITDA is the operating margin. We do not have any interest or not much depreciation as of now. So we will be in the early double digits, I would say.
All right, sir. Wishing you all the best. Thank you very much.
Well, nice, Guneet. Thanks a lot.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Yashwanti from Cogent Finvest. Please go ahead.
Yeah, congratulations for the good set of numbers. So just wanted to know whether we have expanded our capacities in couple of our verticals like API devices, formulation. So what has been the CapEx spend and talent addition for the period and for the period till date?
Look, our capacity expansion so far had been all from the internal accrual. We have spent around 50 crores in the CapEx in last 9 months' time. and everything has been done from the internal accruals, and that is the reason that our whatever cash flow is being generated, it is either going in the CapEx or it is going in the working capital. So we are always tight on the cash flows because of these things. And going forward, we are looking for our CapEx plan is between 125 to 50 crores for the API, then another 50 crores for the medical devices, and of course another 40 crores for the formulation. So we have a CapEx plan planned out, and of course some working capital requirement also. So that is where we are planning to have a better fundraising plan depending on how the markets pan out and depending on how the results give, because we are putting a pressure on the team that, okay, we have to perform first. So first we perform and deliver, and then we ask for the money.
Okay. And the margin profile, you said you'll be maintaining around 12%. So is it possible to sustain this?
Yeah, but looking at the product mix, we should be able to sustain it because there's nothing unusual with this time. And of course, export percentage is almost same. One product was not doing well, loratadine, so some other product has taken over. But if the export percentage remains same, so API margins remain same. Medical devices is a very stable business. And formulation, as we increase our capacity, so our expense percentage goes down as a percentage. For example, in the beginning of the year, maybe the salary percentage at the plant was like 27-28%. But at the end of the year, the salary percentage has come down to 15-16% because the production has doubled. So if we have better machines, more fast-moving machines and little investment in the CapEx, so we can get better utilization of the manpower also.
So is it possible for you or it's the right forum to explain the vertical-wise margins?
Yes, you can write to our CFO. He can share with you. Ajay.sharma@morepen.com. He's here with me now.
Okay, then. We'll do that. Yeah, that's the writing from my side. I'll come back.
Lovely. So nice. Thank you very much.
Thank you. The next question is from the line of Saurabh from ISL. Please go ahead.
Yes, good afternoon, sir, and congratulations for a good set of a number. Sir, all the question has been asked almost. I just wanted to ask on the margin. So what kind of a margin in the FY25 and FY26 you will be maintaining, sir? Can you throw the color on this?
Yes, like you said that we have almost talked about margin multiple times, but broadly speaking, if we continue the same streak and the same set of numbers the way we are doing, certainly the margin profile will keep on going up. Our EBITDA for this year as a whole, if we are able to get into 2 digits, so certainly we'll be adding 200 basis points next year, then next year, then next year. So we'll keep on adding, I'd say 150 to 200 basis points year by year, and based on the set of same assumptions. And once there is a good addition to EBITDA, since we do not have much interest component, I think everything would add to the bottom line. And the PAT numbers, which are very low now, which are around 6% expected during the by end of the year, naturally those will again add another 150 to 200 basis points, maybe from 6 to 8 to 10. So in the third year onward, we are saying that, okay, maybe we should have a double-digit PAT also. Third being the FY26.
Okay. And number two, sir, your OTC brand is under very much pressure revenue. Can you throw the color on this, sir? What kind of a trajectory do you see in this?
Saurabh, I will be frank that basically OTC needs a lot of upfront investments and basically in terms of marketing and branding and everything. So we are presently not investing much in promotion and advertisement without any, I would say, either an investor or a strategic partner. So we are basically looking for that, okay, what is the right mix? Because last year during COVID time, we started investing on online. So online was again bleeding exercise because there's a lot of upfront investment on the advertisement and customer acquisition. So we are going a bit slow, but certainly we have a lot of opportunities there, and certainly you will hear some new products being launched. So we are looking for more and more innovative products there and a promotion budget. But otherwise, Dr. Morepen as a company and as a brand, and we shared in our previous calls also. So Dr. Morepen is a consumer's darling. So it's basically a market-friendly product. So it deserves its own IPO. It deserves its own freedom. So, but once we resolve things at a corporate level, then Dr. Morepen will come out on its own, raise its own capital, and go for its own IPO and go for market promotion and whatever. So we are trying to conserve cash and not invest on the advertisement. That's a broad strategy as it stands today. But as we go forward, certainly we are looking for more innovative products. So I'm not disclosing a product now, but certainly in the coming quarters, you'll see some new product launches.
Okay. So number 3, sir, what are you raising to raise some fundraising program, or are you increasing the stake in your companies? Can you throw this on this color?
We are working on the resource augmentation. Of course, certainly, as I shared that while we are doing capacity expansion and working capital expansion, and of course, even if you're doing normal 20-25% growth, so we need a huge working capital augmentation. So we have various plans on which are being discussed internally, but we haven't given any final shape to anything. So we are still at an evaluation stage.
Okay. Thank you.
Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, Mr. Raj.
Yes. Yes. As far as I remember it right, there was an EP approval pending for our plant. So any status update on that?
EP approval. Environment
clearance, yeah.
Yeah, we have a running matter which is there with the routine pollution department. These days, the departments are very active. They are online monitoring and they visit our factories almost every week. So, but for the new project, we had got a single window clearance. And of course, the NGT somebody had filed a case in NGT, which is going up in routine and regular dates, but there is nothing pending as such. But business as usual is going. But yes, we are working on the zero liquid discharge, ZLD they call, and zero liquid discharge is being worked out, which is we have achieved physically on site, but the department has yet to approve finally, and they want some video call or they want some live demonstrations. But that's a routine matter.
All right, understood, sir. And sir, one more thing I wanted to ask about your CapEx plans. I skipped a point on the segment-wise CapEx which you intend to do.
Segment-wise, as I shared that we have a CapEx plan for different divisions. For example, for API, we are looking for around 125 crore CapEx, and of course, including working capital. And then for medical devices, around 50 crores. Then for RX, it is more of working capital. And then OTC is, as I shared, that we will be going slow. So around 133 crore for the API, and around 50 to 60 crore for the medical devices, and for the formulation. So these are 3-4. I would say basically between 200 to 250 crore is capex plus working capital in the next 2 to 3 years time. So let's see what these financial team may come out with, and we are open to discussing. And of course, we have been approached by multiple banks for any debt raising because we're a debt-free company. So certainly we are open to discussion of that. We are evaluating various options.
Okay, sir. Thank you. That's it from me. All the best.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question.
I think we are up on the time. 31:01.
Okay. As there are no further questions from the participants, I now hand the conference over to Ms. Vaishnavi Ambokar for closing comments. Over.
Thank you everyone for joining the conference call of Morepenlab Q3 Limited. If you have any queries, you can write us at research@greenadvisors.com. Once again, thank you for joining the conference. Thank you.
On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, guys. Thank you very much. Thank you for joining.